Our guest host this morning plays the odds and isn't afraid to take big risks. Short seller Jim Chanos is our guest host for the next couple of hours. As you know, he is the president and founder of the $6.7 billion Kynikos Associates. Jim, good to have you back. Welcome.
Happy holidays.
Yeah, we got a lot going on. Obviously, the tax story is what most folks are leading with today, but we got some China news this morning as well.
Yep.
What's the most interesting thing in your world right now?
I think for us it's still China. I think it is going to be the story as we get into the new year. Can they slow the economy down with not putting in stall speed? The runaway real estate market, they're trying to contain the authorities over there unsuccessfully. And it just plays out on so many other markets, commodities markets, certain other countries like Australia, Brazil. So I think that, well, a lot of people are focused on our tax situation or Europe. We're watching the Far East. What
would be a likely policy mistake on their part? We're watching them this morning raise reserve requirements yet again.
The biggest policy mistake probably would be severe tightening as the market itself was already sending the real estate market down. So it would be a double whammy.
So they're late, in other words.
And behind the curve.
Right.
I don't know that they are, but that would be the biggest policy mistake.
And the Shanghai Composite, has that trade has gone your way so far this year?
It's been one of the few markets that's down. Let's put it that way. I think Spain and Shanghai are sort of neck and neck for worst performance. But it's been, there haven't been many great places on the short side in 2010. China's been one of them.
It's kind of a good problem to have for China, though, isn't it? It's trying, in a period where you're growing so quickly that you're trying to orchestrate a soft landing because you're worried about the negative effects of too quick growth. If you could switch that with, worried about going into a recession and instituting policies where you're worried about too slow growth. It seems like that's a good problem to have, to be growing so quickly that you're actually trying to tap the brakes. It's like Goldilocks. You need it just right. You need it not too hot, not too cold. Can they do a soft landing?
Well, I think it's the nature of the growth, Joe, that's the problem. It's all real estate construction.
Really?
Yeah, I mean, it is.
In an export economy like that?
It's not exports. I mean, they reported net exports last night of about 22 billion, I believe it was, which is 260 billion annualized. It's a $5 trillion economy. That's 5% of GDP. It's one of the reasons why the Chinese, I believe, don't care so much about the level of their currency when we, beat them up to revalue it higher. And construction is 60+% of GDP.
Wow.
Compared to exports of 5.
Isn't that the switch to consumption for domestic consumption that they need to make? They've got to bring 1 billion and 2 billion people into the middle class. I mean,
that's going to happen anyway. But the problem is that consumption as a percent of Chinese economy has actually declined in the last 10 years, from 40 to 35%. It's all real estate, and that's what's.
And no one's living in any of these buildings.
Well, my favorite anecdote from the Times Magazine the other day was this office building in Western China that they built to show people what they could have if they moved to Guangzhou or something.
Yeah,
Like, it's ridiculous.
The empty cities.
Yeah, there are empty cities.
There are empty cities, and China probably will build 12 to 15 million residential units this year. Put that in perspective. At the top of the market in the States in 2006, we built 2.5 million units. Now, they're about 4 times our size, but I mean they're building lots and lots of housing, and that's before the office space and everything else that's being built.
How long will it take this to catch up? I mean, timing is everything. You can look at a problem and say this is a structural issue, but how long before something has to catch up?
Yeah, I mean, timing is everything, Becky, but I mean, in fact, the market's been going down.
Yeah.
I mean, and the property developers have been going down. So the market may already be telling us something. It may be happening. The other interesting thing we watch is we keep a proprietary database of actual unit sales in Tier 1, Tier 2, and Tier 3 cities. They actually publish this data weekly. And despite the booming construction and the growth in construction, unit sales have been remarkably flat over the past year and a half, if you smooth it out, and just for the holidays they have. So people aren't buying any more condominiums in China, but they're building lots of them. So the unsold inventory is starting to stack up.
So where does the short play trickle down to equities? Would you short air conditioner? Would you carrier at UTX? How does that?
I mean, I think that's just getting too esoteric and too dependent on lots of other variables. But you want to look at what China is really sucking in, the imports, iron ore, anything having to do with construction. Basically, they are the demand. Talk to anybody. Talk to any of the commodity producers. They will tell you China is the marginal source of demand for our commodity. And that's going to be problematic, I think, in the next couple of years.
So commodity prices are going to come down, not continue to climb.
I mean, I don't know about agricultural, but certainly I think anything having to do with construction is probably going to be under pressure. Steel, iron ore.
There's some who say, obviously they argue you're too bearish on China, and that the momentum that the population has, whether it's education or just demographics, population growth overall, is going to be enough to fill those homes and fill those offices.
Yeah, the problem is, again, the data doesn't fit it. The evidence doesn't support the claim. Over the last 10 years, China's had a migration from rural to urban of a little bit under 110 million people, I believe it is. And that works out to 10, 11 million people a year. However, which is less than the 15 to 20 that everyone cites, but those people cannot afford the stuff that they're building. They're relatively poor. They're the bottom 20% of the income earners in any city. They tend to be, by the way, the interesting sort of circular logic is they also tend to be working construction right now. So there's a little stop the construction, they may move back out. But they can't afford the condominiums that are being built. They're building U.S.-priced apartment buildings for people where a country where the average income is $3,500 a person.
Which makes a huge amount of sense, but there's also the argument that's being circulated right now that the way China will deal with the currency issues, instead of letting its currency fluctuate, it will raise wages internally, which would do something to calm the critics in the United States and elsewhere, because if you raise your wages, you're doing the same thing in terms of the import-export situation, but you also help your own workers internally and you boost the standard of living for your country people.
The problem with that argument is if you look at the profitability of Chinese companies and you start to drill down from the macro to the micro, they're all very, very, very low-margin businesses. I mean, razor thin, and it's one of the arguments against the currency rise. But if you raise rates reasonably well, most of the companies in China will start losing money. In fact, I think a lot of them will lose money anyway. If you look at a lot of these companies, I mean, every single one of them that we've looked at seems to have accounting issues. And it's remarkable. The lower you get in the story, the more interesting it becomes.
How sensitive are U.S. markets to a dramatic slowdown over there? Do we care much?
I think we're probably the best positioned for a problem in China than almost anybody. Europe exports more. South America's dependent. Parts of Asia are dependent. The U.S. market, I think, is in relatively good shape if China has a real estate problem.
Can I ask you about, not real estate, but there's been a lot written, Ian Bremmer or others, about the state capitalism, the model in China that seems to work. It's working so well. It's almost the envy of people here that want the government, in a partnership with the private sector to develop alternative energy technologies. Yeah. The word I've learned is neo-mercantilism.
Yes, seeds.
Right, seeds. But I've seen things in the Times where, they had no solar panels. Now they control the industry because the government subsidized that entire industry. I think about real estate and how the government is deciding where the capital gets allocated. Yep. I'm wondering whether Adam Smith and the invisible hand that allows capitalism to be allocated properly in a free market, they seem to be going against that completely. And does that ever come home to roost, or can they be so smart that they know how to allocate capital?
Well, I know it's going to shock you, Joe, because I think...
You think we have neo...
Well, I think you think I'm left of Joseph Stalin, but I think that...
he was so far left he was right. Wasn't he make it all the way back to fascist?
You could be right. Yeah. But, I think that it isn't going to work, quite frankly. I think ultimately Adam Smith prevails, and that a lot of what the state is doing here is really misdirected investment, and in order to keep the nominal growth numbers what they are. And I think at the end of the day, that comes back to home.
I don't want bad things to happen, but I would love to see that unravel. How does it happen? What do you see? What are the first things that you start? Because the free markets, these are the...
I don't want bad things to happen, but I'd like the second largest economy in the world to...
I'd like to see that the state cannot allocate resources.
Joe, at the time, for 25 years after the Second World War, one of the fastest growing economies in the world was the Soviet Union. Right. From 1945 to 1970.
So it worked for a while there.
It worked for a long time based on the numbers. But they were building dams that leaked, and planes they didn't need, and nuclear plants that had problems.
Then it was 3 miles to buy a tomato. You had to wait in line, and everybody looked like Mrs. Bread.
And you had to
take a Aeroflot lately? Not pleasant.
No.
China's more dynamic than that.
But it could be long enough for you to be broke.
Well, Again, I mean, the trade happens to be working. So everyone seems to ask us, and the onus, I think, is on the bulls at this point to
God, they are. You know what? You are a minority, because we have these smart people that say, oh, no, China. And they say those words, too. It's different in China. They say these people know how to do this. They know how to do it this way. And
it's going to be a very interesting story as it unfolds, I think.
I hate to bet against you. I mean, I would. And I can go all the way back to Baldwin United.
Mm-hmm. Is it definitely going to be fireworks and ugly implosions, or could it just gradually continue to drop?
I really don't know. I mean, again, I think that everyone is kind of looking at the state to follow up on your comments. The state will manage this. The state will let the air out of the bubble gently. The state won't let anything bad happen. And I just think when construction is 60-some% of your economy, and you're building lots of things that people don't need, the state may let this get out of control. And I think that the market is actually, Adam Smith's going to get his revenge in the real estate market, I think, in China, and show that the market does work, and that, in fact, it's very difficult to manage these kinds of bubbles. Yeah.